what's more important, cash flow or appreciation? That's a question that I ask a lot of investors on an investor call. A lot of times they'll say, a little bit of both or whatever. But I just strongly believe for most people, unless you've got a net worth of 4 or 5 million or more, cash flow is really what's going to allow you to replace income and replace mortgages and payments and things like that. And so I think having cash flow is great.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?
Hi everyone, I'm Jason Balara, and this is the Know Your Why podcast. Today I'm here with Bronson Hill, actually for the second time, but it's been a long time. So I'm really excited to get the updates over the last couple of years. But for folks who don't know Bronson, he's a managing member of Bronson Equity and general partner of 2,000 multifamily units worth over $200 million. So there's a lot of cool stuff here, Bronson. I'm going to stop and let you tell it in your words, but let me just say thank you. Thanks for coming on the show. Thanks for coming back on the show. I am really excited to let the listeners hear about what you've been up to.
Thanks, Jason. Really excited to be here. No, I think knowing your why is like the most important thing, because if you don't start with the end in mind, right? I think one of the habits from Stephen Covey is start with the end in mind, right? You basically create the future first and then work backwards. And so the why is the whole reason why we do everything. And so it's if you're not getting the results you want, I love the focus there. So my background, just briefly, I was a medical sales professional for 10 years. I worked in the OR and different operating procedures with doctors, particularly heart surgery, and I enjoyed it. It was good. I made good money. Was making over $200,000 a year. But the thing that I really didn't have is I didn't have control over my time. And so I realized, I wanted to have financial freedom, but really what I wanted more than that was time freedom. So a lot of times we say we want financial freedom, it really involves time. And so I had been doing a little bit of single family investing. At that point, I decided I was going to start doing more. So I did more single family, had 4 or 5 single family houses, realized it wasn't getting me where I wanted to go as quickly as I wanted. There's a saying, when the student is ready, the teacher will appear. So I had a relative who I hadn't seen in a long time, was doing real estate, and said, just for 25 years, I've been doing multifamily investing. He said, why don't you do this? Why don't you do multifamily? I said, well, I don't have the money. And he said, well, you can raise the money. So he taught me a lot about just, syndication and how that works. And so I got started a meetup in LA, which you have spoken at in the past. Jason, we got to have you back sometime. And then my first investor there, and then just over time, just continue to find partners and raise money for deals. So we've raised over close to 45 million in equity from real estate investors or other investors. We're doing things beyond real estate as well in other kind of alternative spaces as well. But I'm excited to be here today.
Yeah, awesome. Yeah, no, I and we were talking before we started recording about time constraints and family pulls you in directions. So yeah, it's been a minute since I've been able to get to the meetup. So I definitely would love to get back, not necessarily as a speaker, just to be there around the group. Is a really great meetup. But so Bronson, I mean, you were on before. We've known each other for a little bit, and funny enough, I think the first time we met was a meetup with Savannah Arroyo. But you have spoken to, I think the first time you were on, you had spoken to like over 1,000 investors, or maybe it was 1,200 at that point. And now,
right,
you're over 2,500 investors. I think you just mentioned that person, a family member who'd been investing. It was like, oh, you can raise the capital. And so the people who have been raising capital and who are good at raising capital and sort of have that process down, I think feel that way. I think oh, you can raise the capital. And I would guess that you're at that point at this time. A few years ago, it was generally fairly easy to raise capital because people were, and when I say easy, it's still a hard process, but easier than it has been over the last couple of years since rates changed. I'd be interested to start. I want to hear what your last couple of years have been like in terms of any pivots you've made, or maybe you've just stuck to the strategy. But I guess I'm asking a really broad question, but in general, what does the last couple of years look like for you in comparison to sort of before we had the shift in the market?
Yeah, it's a great question. So, I've been doing this 5, 6 years, pretty full scale on, raising capital from investors. I would say now in 2024, more than midway through 2024, raising $1 million now is like raising 2.5 million, what it was a few years ago. So it's changed. It's gotten more difficult in general. It's not just me. I think it's across the industry. There's a lot more fear in the market. Some people have been pinched by deals, multifamily or other deals. We've had a couple deals that have struggled. So I think that, there's a lot of learning there. But, it reminds me a lot of what Warren Buffett said, be fearful when others are greedy and be greedy when others are fearful. At the time, I remember we raised for one deal, I was working with a partner, we raised $8 million in 24 hours and we probably could have raised 15 million. It was just crazy. But, that was at the time of, things were just super hot. So at the time when things are super hot, it's actually the time you should maybe consider not investing or consider selling or things like that. And at the time where it's challenging to raise, I think is actually typically a pretty good time. So it's that idea of being greedy when others are fearful. I think there's a lot of fear now. We've really taken a break, and we were talking about this before we started recording. That we haven't really done any multifamily deals the last couple of years. We've just started getting back into it. We're seeing some significant, 30+% discounts in super hot markets like Dallas and Charlotte, and so we're doing some of that, which we're really excited about. So I think we have shifted a bit the last couple of years to do a lot of other businesses, ATM machines, car washes, oil and gas, private businesses. We have something we're looking at right now in the private business space. So I think there's lots of options, but I think really people come to us, it's for 3 reasons. And I'm sure a lot of your audience as well. It's either for cash flow, for appreciation, or for tax benefits. Those are the 3 things people are looking for. If you're a high earner, typically you're looking for tax benefits. If you're just looking to replace, my book says behind me here, fire yourself, you should be looking for cash flow because that is what will allow you to replace your expenses. And then appreciations, if you're just trying to have a lot of returns and grow your wealth over time, that's something you should be looking for as well.
Yeah, and I would say that point about the Buffett quote is really relevant to now, because you think about back a couple of years, it was so hot, everybody wanted in, a lot of deals were happening, transaction volume was tremendously high. It meant that prices got tremendously high. And so, it is a lot of those specific deals that are now kind of in trouble. And those are the ones that probably you're able to take advantage of at, 30% discount, is because people, sort of did the opposite, greedy when everybody was greedy. And now a lot of people are fearful when most people are fearful. And it's such a good point, because it's like, for example, we have some of our deals we bought before 2022 have had some challenges. What we've closed after, like in 2023, has doing great. Like no, so you just have that. I guess you have that benefit of hindsight, but also like we all have the benefit of hindsight in the form of history. And you can look back to 2008 when there was struggle in the real estate market. And then guess what happened after that? There was like a decade worth of, sort of market upswing. And so it's, getting in while things are a little bit scary is probably truly the best way to make true wealth and to really have investments be effective. And also, you mentioned pivoting to some other asset classes. It's just recognizing that what we're trying to do is meet one or all of those 3 criteria that you just mentioned. It's like, what types of deals will get us, whether it's cash flow, appreciation, or tax benefits, and go after them. And I think that's, a smart strategy to be able to provide all of that to your investors.
Yeah, I think, just to kind of go back to the earlier point too about finding things that are out of favor. I think this is something we kind of, investor psychology, we just don't really think about, right? It's like, I have a friend who owns NVIDIA, and she bought NVIDIA like 10 years ago. So NVIDIA was recently named, I don't know if it still is, but it was named the largest company in the world by market capitalization.
Mm-hmm.
And she bought it she's literally had like a, I don't know, 100x return or some ridiculous return.
It's
$500 invested is now like $200,000. I have to do the math on that, but it's unbelievable. So then I said to her, "Is like, well, the upside from here is probably not that great, right? Because now it's a super hot stock. It's not going to like maybe get another 10, 20, 30, 50%, but it's not going to like double, triple, 10x anymore. It's the largest." And so a lot of times, again, it's once something becomes very hot, I get very cautious. You want to go for the out of favor, the things that people don't know about. And it's hard. Sometimes you have to wait a little bit in obscurity when you invest in that stuff for it actually to really be fairly valued. But I find if things cash flow, or if they're doing well financially, particularly on the cash flow side, you can hold things that are unpopular, and then eventually they may become popular. And so that's kind of a little bonus that comes into it as well. But it's again being a bit of a contrarian investor, and not just simply doing what everybody else is doing. And so I think it's hard as a sponsor, because you can raise money for certain things at certain times, but maybe you shouldn't. Maybe you should say, hey, we're not going to raise for this because we don't want to put capital at risk. We're not finding the type of deals we like, and we don't want to be one of 30 people at the table, competing for best and final, right? We love it when we're the only one there. And so we have some opportunities to do that now. So, but it's all learning, right? This is all for the best investment. I always say this: the best investment we make is in ourselves, right? That we actually invest in our own selves. We learn from mistakes. We learn from challenges. We learn from the things that have gone well and those things that haven't gone well.
Yeah. No, I think that's incredibly important. Whether you're active or passive, you've got to kind of look at if you had the deal go bad, okay, why? Like, was it strictly market driven? Were there other mistakes that were made? Were there other things? It's not even like, it's more to say, let's take that data, what happened, and how can we use that going forward in future deals that we look at. And it's like, I think a lot of what people have learned recently is how important debt structure is. And should have been probably front of mind, but it was like the only way to get deals was to do bridge debt. I mean, it's just like, it is easy to get caught up in the, kind of excitement. And the fact is, you don't know, like, you used the NVIDIA example. My funny story along with that, my dad bought NVIDIA, I don't know how long it was, probably 20 years ago. And he bought 100 shares at like, I don't know, $15 a share or something crazy like that. And then when he passed away, it went on to me and my brother. And at that point, it had gone up to maybe $200 a share. And we were like, that's amazing. Like, this is great. And it has gone like astronomically higher since then. Recently a dip, but like the point is, like, investing is over time. And so you don't know, things going to go up, things are going to come down. Like, you don't really know what's going to happen. So the best thing you can do is just continue that process and take as much of that knowledge and put it into your next investments. I think your point about education is key.
Yeah, it is, and I think it's something that we don't talk about enough. We don't talk the things that are educational too. It's like we need to learn from challenges. If I give an example of this, I did very well in a project. I was doing some single family stuff in Cleveland. I had a friend who also invested in Cleveland and just got his butt absolutely kicked. And there's things I could look at and say, well, he could have done this. He didn't really have a good property manager, or he just kind of paid some guy $25 for it. There's things like I could see, okay, that's definitely a learning there. But he took it not as like, there's a lesson here. He took it as, oh, I'm just not a good investor. I shouldn't be doing this. Right. And so I think that sometimes when we have losses or challenges, we can go to that like, oh, I'm just not good at this. I shouldn't be doing this. I should stick to my day job, whatever. It's like, well, no, like, you just invested in yourself. I had a story in my book, Fire Yourself, where I talk about this. I was in my medical sales job. I'm sitting outside in my car after, leaving a hospital that I was doing sales at. And I know you have the medical background there as well. And I just realized, I opened up my laptop and realized that I'd lost $70,000 in one day on an options trading strategy. I'd made 20K over the last few months, but I lost $70,000 in one day. And at the time, that was over a third of my net worth. Right. So I had a net worth of 200K, and that was just a really, really hard day. But again, rather than saying, oh, I'm just not good at this, I'm, terrible, I'm never going to get it, whatever. It's like, well, no, like, there's some lessons here. What can I learn that's actually going to help me to grow? And so I think those things are just incredibly valuable. And we can often we not only not get the lessons, but we just kind of, we overlook the learning, and we look at it as personal worth. And I think that's a mistake,
Yeah. That is like one of my biggest concerns is when you're talking to investors, bringing on investors, and they're new to being a passive investor, especially like people who are seasoned, they've probably had some deals go the wrong way and had some things, and they're like, no, I just keep investing. My fear is like all the people that came in 2020 to 2022, and we're like, I guess now's the time for me to get in. And they unfortunately were involved in a deal that didn't go well. Now their only perception of investing is that it's bad. And like you said, they get almost like on themselves. I mean, I've talked to investors, and it's like, they're like, oh yeah, I invested in this deal. Well, of course it didn't go bad because it was me. I'm like, you, you, you're a passive investor. Like, you literally had nothing. You didn't karma it bad. Like, there are other things. And it's just like, it is a fascinating thing to kind of think about the psychology of investing. And it's like, I actually think sometimes people point to the illiquid nature of real estate as a negative. I think it's a positive. Like, you can ride out, you almost have to ride out, some of the downturns, rather than like in the stock market. If there's a bad day and you go and you just sell everything because there was a bad day, like, you could really, hurt yourself from the long-term standpoint.
Yeah, exactly. I think this is, again, it's all about lessons learned and then continue to change your approach. Now, Tony Robbins, I'm a big personal development guy, and he talks a lot about about 80% of success in life is having the right psychology. So getting your mindset correct. And he also says this. He says, have a goal in mind. You talk about what's your why, or get the why correct. So you know where you're going, you know why you want to get there, and then you continually change your approach. So if I try investment A or route A, and that doesn't work, oh, this really didn't work, whatever. B, well, it's kind of okay. But C, oh man, this one really works. You start doubling down on that. And then you keep changing your approach until you find what works. And really successful people, I found, not just in investing, but in business, in, and athletics and science, they just continually do it. They have the end goal in mind, and they'll continually change their approach. And so I think as an investor, it's something we don't talk as much around mindset, but the battle is really won between our ears, right? It's just in our mind of how we view and how we reframe and how we say, okay, I had a deal that didn't go as planned, or I had this thing that didn't work, or maybe this is a good time to get in here and start investing. But I think we get so kind of shiny object, or we get into our heads of, oh, I'm just not good, or this happened, or we get an analysis paralysis. See that a ton, having all these calls. And in my new book, actually, Rich Brain, I talk a lot about this. This is how the wealthy change their brain to change their bank account. And that's planned to come out by the end of this year in 2024. But it basically is, what are the specific things around wealth that people do to become wealthy? There's a common belief that people were either born with wealth, or they had the connections or the resources, or grew up a certain way. But it's actually just not the truth. I mean, it says that 86% of millionaires are self-made, so they did not inherit it. And to me, that's still, even as I've known that figure for a long time, it's still shocking to me, right? Just that how we put this class warfare and the way things are. So there's specific things people can do to really help learn. And one of them is mindset. There's specific practices around that, as well as specific habits. And so it's not just, hey, most people's financial plan to become wealthy is to win the lottery or have their wealthy uncle die, and they'll become wealthy. But a lot of those lottery winners they don't really keep it. So really, you have to become a wealthy person. And that becomes by your habits, your actions, your mindset. And then you actually are able to maintain and grow wealth in a way that's it's authentic, right?
Yeah. Yeah, totally agree. I'm kind of glad you went there, because I was going to ask you about the book. And what do you think? I mean, knowing that such a large percentage of millionaires are self-made, I mean, what do you think sort of separates them from people that don't become self-made millionaires, right? Because like you would say, probably I've talked to tons of people. You have a podcast, like, we talk to a lot of people that have come from a background of not being wealthy, and some poverty backgrounds, things like that, like, and turn it around. What do you think is something that, like, separates people? Do you have a sense of that?
Well, there's a number of things, but I think one of the big ones, and this was surprising to me when I learned this, but as I really started to look at it, I found it to be true, is that, again, we talk about most people, their plan is to have the wealthy uncle die, or have the rich, or have a lottery or something. There's just really no plan. I mean, if you look at the stats, like 70% of people couldn't pay a $1,000 expense if it came up. They'd really struggle to do it, or 60% have no savings at all. And so when it comes to most people, they have no plan. Actually, this whole reason for this book actually came about. I was actually on a Uber ride in Dallas, and I was taking a call from an investor who was going to invest in a deal. And of course, that's not really a usual call if you're a Uber driver, right? Here's somebody else wire the 100K or whatever. And so then she said to me, and she's probably in her early 30s, she said, how do I learn about money? What do I do? What are the things that I need to do? And I just I kind of thought about it for a minute. I was like, I don't know if there's really a good book or a way to kind of figure that out, but a lot of it's really in the mind. So if I have a thing about myself, and this is subtle, it's hard to measure this, but I call it wealth worthiness, right? So if I feel like I'm not worthy of having wealth, then I'm not going to be able to either have wealth, or even if I get it, I'm not be able to hold on to it, right? So there's this kind of way of really, getting to a place where you feel like you deserve it, right? Brené Brown is an author I love in the personal development space. She says that people that experience, love and belonging, and those that don't, have great relationships and or success or these type of things. And those that don't, is just the first group believe they were worthy of it. They believe that they were actually able and worthy of it. So it's a subtle thing, but it's the example of this is if let's say, I'm a single guy and I go approach a beautiful woman. Well, if I've rehearsed in my mind that, oh my gosh, she's going to say no, she doesn't like me, I'm ugly, whatever. Well, you know how that's going to go. It's probably not going to go well. The self-talk has been negative. So there's a lot of it versus if I said, hey, I've got a lot to offer. I'm a great guy. She's beautiful, but I deserve a great relationship, whatever. Well, I'm going to show up very differently to that woman that I would normally show up. So it's the same with wealth. It's not like wealth is like a date or something like that, but in a way it is. It's like we're showing up in a way that we either have the worthiness inside of us or not. And so there's ways you can develop that, which I've created this process called wealth whisperings that are basically, they're like affirmations, but they're more about the self-talk that we have, not just the things that we would say in the mirror, but also as we go along, we really examine our self-talk and we start to whisper these different things to ourselves that really create more of this value. And a personal example of this, pretty personal, I went through a divorce 7 years ago, and I just coming through that, I just felt no sense of self-confidence. I was like, man, I just don't feel like I'm worthy of anything. And so for me, what I did is I created like these whisperings around confidence. I walk in and I with the confidence and the authority of a king, I own the room when I walk in. So I created these things that I say every single morning, and it didn't happen right away. But after 6 months or so, I started to really manifest from the inside that sense of confidence. When I would show up with that. And so there's ways you can create things around wealth that do the same thing.
Yeah. Affirmations and wealth whispering, whatever things you have to do to sort of change the conversation in your own mind, it's one of those things that I think and I mean, I'm one of these people, like I, for whatever reason, have always had a lot of resistance to trying those things, to it feels weird or whatever you want to call it. But then the interesting thing is, like, I do it with my kids. I do it with them. Like, I'm happy to do it with them. I want them to do it. And then the idea of like doing it myself is sometimes just, but as you were talking about it, I'm like, yes, of course it's a good idea. Like there's no, like, why wouldn't it be a good idea for our kids and us? But also, like, what's the worst that happens? And again, these are like things I'm thinking to myself, like, what's the worst thing that happens if I'm saying these things to myself every morning, or I'm writing them down? I mean, people have different ways of kind of doing this process, but you said it took 6 months. Like, so what's the worst thing that happens if you try it for 6 months? And it, like, I don't know, like, it can't really be a bad thing. It's kind of, so it just makes a lot of sense to use those tools that are like, don't cost anything. Nothing's going to happen when you're saying things to yourself that way. Like, it's just kind of a really funny that people are so resistant to doing. And again, when I say people, I'm myself included there.
Yeah, it is interesting too. And I do meet people, and they seem kind of cheesy to say stuff in the mirror, but the more successful and the higher, the bigger, better, amazing people in the rooms I get in, the more common this stuff is. It's like, it's crazy until you actually see people that do it, and you like, oh my gosh, this person's worth $30 million, and they did this consistently for years, and this is how they say they did it. And you meet like not just one person like that, but like every other person says stuff like that. And you're like, huh, there's got to be something there, right? So again, it's not that you have, that's the only way. There's other ways to do it. People use visualizations, they use other things. Napoleon Hill, not my cousin, but not really my cousin. He talks about, imagining the person you want to become, spending 30 minutes. There's a lot of spend 30 minutes a day, just imagining and taking in your body. What does that feel like to be that person, that your future self now? Ben Hardy has worked 10X, he's in 2X, and some of his stuff is great too. But I think, it's only crazy if it doesn't work. But again, if it doesn't work, it's a very small thing to pay. And so I found in a lot of life, we talked about changing your approach. I'm willing to try a lot more things than other people are willing to try. I'm willing to experiment, and a lot of times if it doesn't work, I'm out a little bit of time and maybe a little bit of money if it was something I invested into. But regardless, I have learning from it. And so that's, there's this quote from Michael Jordan that says, I've taken 50,000 shots. I've taken the game-winning shot 53 times and missed, and I've done this and this, and I'll keep taking shots. And he's like, and that's why I'm successful. So it's kind of the idea that, like, if you're not willing to try it, you're not going to experience the benefit of it. And maybe it's not this specific thing for you, but there may be one of 2 or 3 other things. Like, if you were to just try them all, you might be like, this one actually did work for me. So I think that just being willing to try. And again, as I've had 2,500 interviews, it's been pretty clear that most people have some sort of practice around this, or have had a practice around it, or at least they have the wealth-worthiness. If they don't, then they can develop that.
Yeah. I think it's a very powerful thing with a very small cost associated with it. And so it's kind of like silly to ignore it, I guess. So yeah, and I say that to myself. So people who are listening, this is I'm
from you.
I try to learn from these podcasts just as much as the listeners. So I think these are really important pieces. Really cool, Bronson. Let me kind of shift gears, and I'll ask you the questions I asked you before, but I may tweak these a little bit just based on having you back a second time. But the first one is always the same. It's shows know your why. So I always ask, what is your why? And interestingly, like, you were pretty early in the show when it first started, when you came on before, and your answer was probably the first one that sort of shook me in a way, like, just in the, like, I'll never forget it. So it was just kind of like, it's very powerful, and maybe things have shifted for you, but I do want to ask you again. I know like I said, it's just something that I never forgot, because I think everybody's why is important, but I think maybe it was a lack of knowledge just on my part, and kind of what you spoke about. So I'll pose you the question again. What is your why?
Yeah, so my big why is to end modern day human slavery in the world. I mean, that's really my why. Is I'll share the story briefly, but there was a girl that was rescued in North Africa in Greece by a famous person who does these rescues, and when she was rescued, she didn't know she was being rescued, because they don't know if you're a trafficker. They're just so traumatized, and there's a lot of that story I could share. But she just, with tears in her eyes, said, like, "Well, why didn't you come sooner?" And I just think of all these, millions of people that are in slavery. 20 to 40 million human slaves today. It's just something that I think should not exist, and it will continue to exist unless we do something about it. So that's my big why. It's the more I learn about it, it's big, hairy, audacious. It's messy. It's the victim can become the victimizer. But it's just the cycle of trauma. That's a big one. Another one, I want to be a great dad. I want to make an impact in the world. I want to do the things, so that are important to me. But really, the big why is the human trafficking.
Yeah. Like I said, it was you shared that before, and it just was something that I had never, I don't know, I guess maybe didn't realize it was still, that it was so prevalent, that the numbers are that high. And since you were on, I've actually had a number of other guests with similar passions and similar stories to go along with it. And it's like, it's really devastating. And we both have children. It's just things that you don't, there's a lot of stuff in the world that goes on that maybe we don't know. We're privileged to not know, not experience. So I think it takes a big person to like go out and actually, try and make an impact on something like that. So it's very impressive to me.
Thanks, man. Working on it. It's there's so much need in the world, and we can only focus on so many things. So it's important to figure out what works for you, or for a listener, what actually what you want, what you feel like you can make a dent on, and what you can make a difference in. So yeah,
Absolutely. What I'll modify this one. Any new skills or hobbies you've picked up since the last time we talked? It's been probably 2 years at least since you were on the show. So anything new to share with the audience?
Well, I think the books. I've got my book behind me, Fire Yourself, which has become an Amazon bestseller of how to replace your working income with passive income, 3 years or less. Working on the second book, obviously. I've been doing a lot of the Spartan races. I've slowed down a little bit the last 6 months. I've had some injuries I've kind of dealt with. Did the base camp of Mount Everest in April, which was amazing. And so I'm continuing to try to, be active and, have more health goals around that stuff. As far as new skills, like we said, we've shifted a little bit more to do a lot more business related stuff because of cash flow. And that's, I talk about in Fire Yourself is that, what's more important, cash flow or appreciation? That's a question that I ask a lot of investors on an investor call. A lot of times they'll say, a little bit of both or whatever. But I just strongly believe for most people, unless you've got a net worth of, 4 or 5 million or more, cash flow is really what's going to allow you to replace income and replace, mortgages and payments and things like that. And so I think having cash flow is great. So real estate right now, it's pretty hard to find. It's harder to find cash flow in general. But there are businesses, there are other things that, we've seen some businesses. I was sharing an example earlier. We're seeing stuff that, if you were to convert it to a cap rate, stuff selling for 3.5 times profit or something. I mean, that's like, some of these are they'd be like a 35 cap or something. It'd just be insane. Like you're getting so much money back in a short amount of time. And so there's different risks. There's different things as an investor you look at, but I think those are some new skills of just saying in the wide world of investing. And that's what we do really on our show, the Mailbox Money Show, is look at different assets that are kind of, they can be in the norm, the traditional multifamily, other sorts of self-storage, other things, or it could be totally different. Like we're getting some really unique folks on there doing some unique things. So it's been a lot of fun to do that.
Yeah. And yeah, we talked before we started recording, sort of pivoting into cash flowing businesses to help supplement the real estate appreciation has been kind of our focus now too. When people hear this and they want to connect, what's the best way to reach out?
So the best way to connect, I've got a free guide here. This is, a lot of people are concerned about inflation. They say inflation is only 3.2%. But, I think it's actually more like 6 or 8%. And we just watched, the cost of food and all these things go up 50%, gas, different things like that. So this is a guide of how to use inflation to your advantage. So you're not, on the other side of that and just getting hit by the pain of it. But if somebody texts the word inflation to 33777, so just the word inflation, you text to 33777, you can get a free copy of that. It's 40 pages and it involves stuff for real estate, using debt, using precious metals, using just lots of ideas around how do you, if over the next 5-10 years, there's going to be continual creation of new currency, which there is, and there's going to continue to be, there's ways that you can really position yourself well to take advantage of it.
Awesome. And we'll put all your connections in the show notes. Well, Bronson, thank you so much for coming back. When does the new book come out again? Did you say December?
Well, I'm in the process of writing it, so as faster I can type, the better it goes. So the goal is by the end of this year, and I'm just continuing to create around that and just having a lot of fun with that. So look forward to it.
Perfect. Well, definitely keep us posted on when that is coming out. And thanks again. Thanks for being here. Always enjoy talking to you and appreciate everything that you shared with the audience. So thank you very much.
Thanks, Jason. Really great to be here and look forward to connecting with you and in person again soon.
Yeah, absolutely. And folks listening, make sure you connect with Bronson. If you're in the Southern California area, he does have a great meetup. You should check it out. And please like, rate, and review the show so we can continue to get great guests. Thank you all for listening.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?